Hey everybody, Warren Buffett's stock portfolio, or specifically the stock portfolio owned by Berkshire Hathaway, has about $300 billion of stocks in it, many of which were handpicked by Warren Buffett, who is a legendary billionaire investor himself. So it's not a surprise that it's one of the most widely followed stock portfolios on the planet. Um, there's a solid buy case to be made for pretty much every stock in the portfolio, but there are a few in particular I have my eye on right now. Before I dive into what exactly they are, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I am doing on YouTube. Again, fool.com/Frankel, and that link is in the video description. So, as I mentioned, Warren Buffett has a big stock portfolio. He hasn't picked all of the positions. He has two investment managers that manage a relatively small percentage. But most of the big decisions are still made by Buffett himself, even though he's 94 years old. Um, and like I said, to be fair, there's a solid buy case to be made for pretty much everything in the portfolio. Buffett's a value investor, so if you can't make the case the stock is cheap, he usually doesn't buy it. And to be fair, there's a lot of Buffett stocks that I own that I'm not buying right now. I own a few of the companies that are in their Buffett's portfolio. Amazon.com is one of them, just to name one example. But there are others, but there are a few that I think are especially attractive right now, and three in particular, especially after the recent market turbulence related to tariffs, um, related to just kind of economic data that's come out. So I want to share my screen real quick. So the first one, and this is one I haven't added to in quite a while, but it is the largest bank stock position in my portfolio, just like it is Buffett's. Bank of America, ticker symbol is BAC. Now, Buffett did reduce his stake in Bank of America in the fourth quarter by a little bit. It is still Berkshire's third largest investment, so this is still very much a Buffett stock. You can see the recent price right there. I'm recording this on March 6th, by the way, so all of these prices are as of then, as are the dividend yields. So by the time you're watching this, depending on when that is, that might have changed a little bit. 2.5% dividend yield. They're very well known as one of the largest banks in the world. They are the number one U.S. bank in terms of consumer deposits. So why now? Bank of America, it's historic. It's starting to get cheaper. It's not as cheap as it had been, in the 2023 banking turmoil and things like that. But if you look at the numbers, 11.4 times forward earnings, it trades for less than 1.2 times book, which is actually historically low. That's less than it was trading for before the COVID pandemic hit and kind of just made the chart go all crazy. And it has lots to gain from lower rates. Bank of America's deposit cost is, you might not think it just because Bank of America is known for paying very, very low interest rates on things like savings accounts and the things that you get as a consumer. Um, but when it comes to corporate deposits and things like that, they're actually have a pretty decent deposit cost. So deposit costs could go down significantly. As a big branch-based bank, they don't have the kind of profit margins that you see on online banks. So a reduced deposit cost would do wonders for their net interest margin, and we could see profits expand pretty dramatically as rates start to fall down. Um, Expectations for interest rates, I did a whole nother video on this, so check that out if you haven't already. The median expectation has gone from one or two interest rate cuts in 2025 to about four. So a full percentage point of rate cuts is what's the expectation right now. It remains to be seen if that's actually going to happen, but banks could get some nice tailwinds from that, and this one's beaten down a little bit, and it's definitely worth a look. Number two, and maybe my favorite Buffett stock right now, and just my favorite industry right now in general, home builders. So NVR, ticker symbol is the same as the company's name, NVR, and that's not a typo. This is a very expensive per share stock, $7,388 per share as I'm writing this or as I'm recording this. No, it's not a dividend payer. A lot of home builders are not. It's one of the larger home builders in the U.S. It's best known for its Ryan Homes brand and the NV Homes brand, depending on where you are. One of those might have a pretty big presence. And the name NVR comes from the combination of those two. The R stands for Ryan, and then so NV Homes and then Ryan. So right now, it is down 25% from recent highs. Most home builders are pretty beaten down right now. There are a few reasons. One is the real estate market continues to be agonizingly slow. And while home builders were doing great for a while, we're starting to see signs of softening, even with incentives and things like that. And tariffs. Home builders are a tariff-affected industry. You might not think it because it's, the literal definition of a built in America product is a home that's being built on American ground. But most of the materials that come from homes, or a lot of the materials that are used to build homes, come from somewhere else. Lumber, a lot of the lumber comes from Canada. Appliances, a lot of appliances are imported. Um, Steel and aluminum, they're talking about blanket steel and aluminum tariffs. A lot of that comes from somewhere else and is used in home building. There's a lot of different ways that tariffs can affect home builders. So this has been a tariff plagued industry. They haven't announced any tariff exceptions for home builders as I'm recording this. That might change. Um, but NVR has one of the best long-term track records. If you look at a long-term chart of its stock, there's really no arguing how well this business is done. They use a somewhat different model than other home builders, whereas they try not to buy land if they don't have to. They use purchase options in order to buy land, or in order to control land, and don't actually try to sell it until they have a home under contract. It's created a nice capital light model. Um, and I just think the long term potential of home builders in the U.S. really outweighs short term challenges, especially if interest rates do come down, which is a big part of my investment thesis in 2025. Um, I do think that home builders could be a big beneficiary. There's a lot of pent up demand for houses on the sidelines, and existing home inventories are just not great. And even if they do come back, I'm not sure they'll keep up with the pent up demand. So I think home builders are still going to be a big part of the housing solution when rates start to fall. And last but not least is SiriusXM, one of Buffett's biggest stocks in terms of percentage ownership. He's built a stake of about 35% in the in the satellite radio company. Um, Big dividend stock, almost a 5% dividend yield, very very cheap, and for good reason. Their revenue's pretty much been stagnant for the past few years. Their subscriber base peaked in 2019 and hasn't reached that level again. So it's not surprising that it's been beaten down a little bit, but it's an extremely cheap stock, 7.5 times forward earnings, very profitable company. They've done a great job of cost saving lately. So if even without growth, their earnings have grown. Um, there could be a big tailwind from the new car market as interest rates fall. This is a recurring theme of mine, I know. But Sirius is installed in pretty much every new car, and as rates come down and dealers are able to offer more promotional financing and things like that, we might see a nice tailwind there. They're really trying to explore the potential of their advertising platform. For example, they're rolling out a free ad-supported tier of their product in certain types of vehicles. There's a lot of new growth initiatives coming together right now, and it could be a really exciting time for this company. Like I said, it's really beaten down right now, and the market's not showing a lot of faith. But it's one that I added to my portfolio lately, and I think it could have a very bright future. So those are the three Buffett stocks that if I had $1,000 sitting around, I would invest equally in right now. I already own all the first two. The two of them. I own Bank of America and SiriusXM already. NVR is on my watch list right now. I'd love to hear what you think about these three. Do you buy the interest rate thesis that I'm telling you? I'll do my best to respond to any questions or comments individually. And thanks for watching, and stay tuned for a message from the Motley Fool. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.